Guys, in this video, I'm going to talk about the best risk management strategy when trading cryptocurrency. So I'm going to be talking about risk management on the futures market. So before any single trader trades on the futures market, you need what we call risk management. Why? Because the crypto market is so volatile and you need to manage your risk before you place in any single trade. So what are you going to do in this video? In this video, I'm going to actually be telling you about mainly three things that you really, every crypto trader you really need before you place in any single trade. One, I've seen that so many crypto traders, they actually calculate their risk after placing in a trade, meaning you only calculate what you are willing to lose after you placing in a trade. Now, this video, I'm going to be giving you a system and also a calculator on a Binance account that or else on any exchange that you can use to calculate your risk before you enter any risk. And also, I'm going to give you a template that you really need according to your account and how much you are supposed to be risking according to your account, so that you can now manage your risk using your different accounts. So let's get into it. One thing you should know that risk management really starts from this one thing, account size. This account size is what actually manages your risk. Now, you should not be looking at influencers online, different posts online, people posting different things, and then you are trying to trade the way they are trading, because the most important thing in risk management is your account size. So I basically group account size in form of small accounts, medium accounts, and actually large accounts. So these are the account size that I like you giving. I have $100 account, then I have $1,000 account, then I have $10,000 account. Now, if you are ranging between, if you have around $100 is different from when you have $1,000, and it's different from when you have $10,000. So you find that the rule of everyone online will be telling you that you risk 1 to 2% of your account, but this is actually not to every account. Some accounts actually you cannot risk 1 to 2% because it is going to really be very hard. So if you're trading a small account, well, I can say you risk 5 to 10% of your account. When you're on a small account, always know what you are risking. So amount that you are risking and amount that you are risking per trade. Here, if you are risking 5 to 10% of your account, it means you are actually risking $5 to $10 of your account, meaning you are risking $5 to $10 of your account. But if you are having an account of actually 100 or 1,000, you should risk 1 to 2%. I think this one you should, for this very account here, you should trade this account professionally. You should not be like rushing with this account. This is a good account that you can actually trade with. So you are using 1 to 2%. If you're using 1 to 2%, now how much are you going to risk? Now, in this case, you are risking actually $10 to $20 per trade. You are risking $10 to $20. Now, if you are having a standard account or this big account of $10,000 or more, you should actually, if you are risking on futures market, you should risk actually 1% or less than 1%, meaning the more you go, the lower percent you risk. So here, I suggest 0.5% to 1% is enough. To 1% is enough. So how much is that? Meaning for $10,000, you are risking 0.5 to 1%, and that is $50 to $100 in every single trade. That's how you will be actually making your risk money. That is our first step in risk management, is to know exactly what we are willing to risk every single trade. And what we are willing to risk is actually going to be according to our account. And we have seen different accounts and there are different percentages. But one thing I should also tell you is that in your risk management plan, you should always have also in every single day, how much are you willing to lose. Now, when you're talking about risk management, mostly we are talking about more of what you are losing than what you are gaining, because we are talking about the risk. Of course, we are not talking about the profits right now, or profits taking will be for another video. So you need to understand that there are some days that those will be your losing days. You understand, you should also be clear that on this day I'm willing to lose this amount of money. So for every single day, I think maximum of three trades. If you are if 3 trades, if you have made 3 trades and all of them have banked your stop loss, that's how you should actually leave the market. But one thing that is actually so common is that everyone will know that, okay, I'm going to risk $100 today, I'm going to risk $50 today, or I'm going to risk $10 today. But you actually try to calculate your risk after entering a trade. You don't know how to calculate your risk. You don't know how actually you can calculate your risk. So this is the part that we are going to. Part number two. Part number one, you know exactly that, okay, we are going to risk $10. We are risking less than $10 on a particular trade. So let's go and see how can we calculate that before entering a trade. So guys, this is an example of a trade that we are likely to take. So if I wanted to take this long trade, one thing I have to see is my entry here. So this is going to be my entry. What is the price at my entry there? Around 66.145. Register this price because we are going to use it to see. Now you have, okay, where do you want to take your entry? We want to take our entry there in case we confirm a long. And where do you want to put our stop loss? Our stops, we want to put it below the previous high, so below the previous low, I mean. So if we are taking for a long, now I'm not going to take this trade just for the sake of this very video. Now I'm looking at this, if this is going to be my stop loss, so my stop loss will be at 62.075. Also not this trade. So our aim is to first calculate how much are we going to lose here, and which position size can we enter this trade with, for us to make sure that our risk is calculated, and if this trade can actually match our risk before we take it. So make sure we have our entry is 66.145. so this would be our entry. So in case this trade that we are expecting, if we get a bullish confirmation that we enter bullish, if it does not work out, it means this trade will come and we get out of the trade. It will bang our stop loss here. So we want to see that if it bangs our stop loss and we have entered it from here, is it still under our control, or is it in our risk management strategy? Which position can we use in order to enter, so that we can risk only the amount we want to risk? Understand? You are now going to come to your Binance account. After coming to your Binance account, remember you want to trade futures. You'll click on futures, and this is the page of futures that you'll come and see. After reaching on this page, this is what you are actually going to do. You are going to come and click here on calculator above here. We need to calculate, if we enter that risk, how much are we going to really risk. So you click on calculator. After clicking on calculator, it is going to open an interface just like this one here. So it's going to open this interface here. Now, when you see on this interface, you have here P&L, profit and loss. You have here target price, you have here liquidation price and maximum open. I'm not going to actually talk about all other ones, but I'm going to be talking about P&L. You understand? You are going to be talking about P&L. P&L means profit and loss. So how much can you make? Remember, today we are talking about risk management. Is how much can we lose? So how much can we lose? How can we calculate how much you can lose? Now we have our leverage here. You can now adjust your leverage according to how you want. My favorite leverage is of course a 20x, so I leave it at 20x here. That's my favorite leverage, but you can adjust any that you want. Now if you're going for a long, let it be on long. If you're going for a short, let it be on a short. Remember, the example of a trade that we gave you was a long, so we are going for a long. We are leaving it at a long. Now remember, we said entry price was very important, right? Entry price was very important, and then exit price is also very, very important. So if we are to enter the price, and I told you to mark the price that we had seen to a 66.145, that was our entry. And then exit, it means like if we put our stop loss at that exit, how much are we going to lose? Now this, we are doing all this before placing in a trade. Now we calculate that our exit would be, I would put our exit at 62.075. Now the question is, what is the quantity of your trade? What is the quantity that you want to trade? Now you change this. Now if you want, you can use the coin that you are using to actually put in the quantity, but it is easier if you put in form of USDT. So click go down arrow and then click on USDT. When you click on USDT, it is going to change. Now you can see over here it is now USDT. So it means that you are now going to write in form of USDT. Now what you are writing here is not your capital, is the position amount that you are entering with in that what entering with it. Now this includes also your leverage. Remember, you have a 20x leverage. A 20x leverage, it means that if you have a 20x leverage and you enter with 1000 position, it means that actually if you have a 20x leverage and you enter with 1000, it means they are supposed to divide by 20 to get which capital you are, which is supposed to be your own money. So this is 5, this is 50. It means you only need $50 as your own personal capital to put in this trade. So let's try and say if you have a leverage of 20 and then you want to use quantity, you want to use $1000. So you want to use $1000. It means in your account you're supposed to have $50 for you to take that trade like that. So you click on that. Then after clicking on that, now you're going to clicking the quantity. Then you are going to click calculate here. When you click calculate, it now brings you that if the stop loss is taken, how much are you going to lose? It is this PNL that you are seeing. So are you willing to lose $61? That is the question. Are you willing to lose $61? If you are willing to lose $61, then you can go on and place in that trade the way it is. If you are not willing, then it means you are going to reduce this. You are going to reduce this. Let's reduce it. Instead of using 1000, someone is going to use 100. Instead of using 1000, someone is going to use 100 position size. When you use 100 position size, when you click on calculate, when you click on calculate, come and see how much are you going to lose. It means that same trade, when you only use 100 lot size, you are going to actually use only, you are going to lose only $6, $6.1. Now it depends on the account size and how we said which calculation you are. The first one, if you have an account of maybe $10,000 and you're willing to lose between $50 to $100, that will be okay for you. Or if you have $100 in your account and you're willing to lose $61, then you can place a trade of 1000 with lot size of 1000 and then put the stop loss there. But if you are someone who has an account of only $100, right, and you are only willing to lose $5 to $10, then you'll go with only this quantity with the same stop loss. But if it hits your stop loss, you're only going to lose $6. This will keep you in the market and your risk management will be at check. The next time we will be talking about taking profits and also other strategies of you trading the crypto market. If you have liked this content, make sure you subscribe to this channel and turn your notification button. And if you also want to join our premium, where we also share our signals, everything we are doing, buying or selling, or where we also do futures, we do spot, and then we do also DeFi. DeFi means buying projects or buying crypto before they get listed on exchanges, or trading cryptocurrencies that are not listed on big exchanges like Binance or elsewhere. That's what we do in our VIP community. So if you want to join, it's only $20 per month and you can join before the price has increased. Thank you so much for watching. See you in the next one.